She was drooling on me.
Do you want me to leave?
No, it's good.
Is there anything else that you guys need?
Oh,
No, I think we're in good shape.
Is aware that the prompter is still broken.
Yeah, I'm gonna roll it off the top.
I just put the mic. Would you mind throwing? I'm the bag on the left. Would you mind just chucking that somewhere on that chair?
How does it feel not having control?
I gotta put my trust. It's a corporate trust exercise.
Speed up, slow down.
Okay, I'm gonna leave you guys.
Thank you.
I can kind of hear you, so if you need anything, just shout.
Yep.
If you want to go faster, scream real loud. That was the Megatron or the Gravitron at the World Western Fair.
Western Fair. If I turn this off, does this keep charging?
It would probably charge faster, I would expect.
Yeah, because I was thinking it's not using it, but it's not juicing. Well, no, I lost it.
You know what I forgot to do? I didn't do a drawing set for my trade. I should probably do that.
Throw me on a puppet on a string.
Oh, for your Walmart trade?
Yeah.
Yeah, put that one.
Something like this right here.
I know. Did they change it? Because we're a lot tighter than we were.
Here's my mark.
Is this the original one?
This is my mark, but it fell.
Oh.
So I think we forgot how close we normally are because we were off last week.
Yeah.
So. Are you involved in this Kim and Scott hoopla tomorrow?
No.
What
Is
you got
that what the green chairs are for? They're doing. It's the first time they've done this. Securities is going to put on an event, but the guests are going to be direct investing high net worth clients. They want to talk to them about ETFs.
Oh, they're really pushing into that space, huh?
Basically, the aim is to anyone with a lot of money who's still on GICs. Hey,
Get our product.
Yeah.
put it
We
to work
got,
in the platform.
Well, it's good that they finally took out their HISA ETF
Okay.
product as well.
Everything we're Hello, I'm Greg Bell. Welcome to TD Active Trader Live, brought to you by TD Direct Investing. This is your educational one-stop shop for in-depth market analysis and investment insights that'll boost your trading potential. Coming up, Bitcoin down again this morning, erasing all of its gains for the year. We're going to break down the chart and the key levels that traders are watching. Plus, the countdown to NVIDIA earnings is on. We're going to outline expectations as global stocks continue to sell off on high valuation concerns. Our trader debaters are standing by. They got the bull and bear cases for the world's largest retailer. That'd be Walmart. That's all ahead. Don't forget to like and subscribe. You're watching TD Active Trader Live. But half an hour to the trading day. Let's check in on the markets. It is a down session. We still got those concerns about tech valuations that their earnings are rolling in. The S&P 500 pulling back. You can see the glide path over the last little while. It's decidedly to the downside. Let's start with Home Depot, something outside of tech, falling short of third quarter earnings estimates. Now, this is the third straight miss for the home improvement chain, also cutting its full year profit outlook, basically saying consumer spending is slowing. There's a weaker housing market. It is all weighing on the demand for home improvement projects. So we got Home Depot down a fair amount in the open. I want to talk about Blue Owl. Who? Yeah, Blue Owl. There's an AI angle here. They're an alternative asset manager. There's also a big private credit lender to companies in the AI space as part of their business. It has been on decline in the last several days as we watch the AI trade, watching some of the other names outside of the big ones. 3 straight days now of the stock down in a row. So we're watching this out of the open. This doesn't seem to be finding much of a footing today. And that's your market update. Joining us now for more technical take on what's happening in the markets, here in Amin and Jason Natick from our TD Direct Investing educational team. Gentlemen, there is a lot going on in the world. I think our audience has a lot of questions. Bitcoin seems like a good place to start.
Yeah, let's talk about Bitcoin, Greg. Of course, it's been on a bit of a ride of the last couple of weeks. Of course, Bitcoin is the largest cryptocurrency by market capitalization, and it continues to struggle as it broke below a key $100,000 level. Now, technically, it's still just hanging on to its bullish run, and I'll show you that in a moment, but theoretically, when you talk about a bear market, it's entered bear territory. It's dropped about 26%, so anything below a 20% drop, you're talking about bear movement now. But structurally, when you think about Bitcoin, what's really changed? There really hasn't been much. You know, when you think about adoption across the board, from JP Morgan's to BlackRock's institution, you know, Harvard just came out and said that their endowment in fact, holds more Bitcoin than it does gold at this point, which is a big, you know, sort of a tap on the shoulder for Bitcoin. So you've got many industries that are still adopting even blockchain technology. So structurally, it's still in a good place. But, you know, when you come to the markets, of course, there's just been a shakeout. We've seen long-term whales selling at these highs. We haven't seen the buyers take, step in. We've seen some big outflows as well. October 10th week was the big flush, which I'll point out, where we did see a big, shakeout of the high-risk positions that were all in the market, and we saw that big move come down. One thing I'll also mention, Greg, is adding to this bearish sentiment is the 4-year cycle news that's come out. So Bitcoin traditionally trades in a 4-year cycle, so 2014 to 2018. We've always seen that pullback come, that corrective. In 2022, we saw that correction happen. And that 4-year cycle is just coming now in 2026, where we might see that correction happen. So looking at the charts, what I wanted to make that point about just hanging on to that bull run is I've got the weekly chart pulled up here, Greg. You can see this long uptrend that's formed. It's been validated at least 5 times now, where it's kind of kissed or touched it and rejected off of it, which tells us that that trend is still in place until now. Now, on the weekly chart so far, it's still forming this candle, but we have broken below that trend line. What we want to probably see is another close into next week, remaining below, and then we know for sure we're going to come down to it. It's also forming what's looking like a classical head and shoulders pattern. So if we continue to see it kind of waver down and really test that 76,000 support, really bounce off of that, but this could mean a more meaningful breakdown on the lower end here. I'll just pull up one more set here on the daily chart. And the other thing that I wanted to just draw up over here was I looked at the monthly pattern. It's formed a big monthly rising wedge, and it's also broken out of that rising wedge pattern. So you can see over here, We actually haven't, we've tested it very similar, but now we've gone to a key demand zone in that 90 to 92,000 level. So this is the key level to look at. Traders looking to see if we can recapture the 92 and break above it, or if it doesn't, we could see a real test of that key support at 75,000 on the downside here.
All right, interesting chart work on Bitcoin. I know it's a question for a lot of people. The next company you're going to talk about, Warren Buffett did a little shopping a couple months back. Picked up some of this one.
Yeah,
About 4 billion or so. 4
billion and change. Yeah, it's a small change in the grand scheme of Berkshire's holdings. It makes up their 10th largest holdings, but it also is a nod to what Berkshire is known for, is looking for value picks. And maybe Google fit that bill when it comes to the technology names amongst its AI peers. On a forward basis, for 2027, it trades at 22 times earnings and has high free cash flow, so really fits what they were looking for. But it's also just a testament to what Google's done in the last recent while. They've really accelerated the AI push, rapidly improving their cloud profitability. But the big news that came out, and we've got the charts pulled up here, was we saw this big push in September. Caused this big gap up, which created that run, and I marked it up here. This breakaway gap was because of that big court ruling that was made where they were going to try and break up their search engine business. And that worked in Google's favor, where they get to keep it with some concessions they have to give up. But that obviously was a big overhang on the price. But then since then, it's actually made this meaningful rise up. It almost hit this all-time high, this 290 level. It's rejected off of that. We're currently sitting just off of that news. That's when it did breach just above that 290 level and coming down below. So the 21-day is the key level now which will be acting as support coming into it. There's some more sort of tailwinds. They're about to release their new Google AI Gemini 3 cloud. There's speculations on it coming out sometime this week, according to prediction markets, which is some kind of big thing. It also has a connection with Google because Google Finance is going to be now using data for prediction markets, amongst other things. But just to keep an eye out on Google and see what shakes out of it at the end of this week.
Okay, two very interesting places to look. You also have an interesting place to look. Disney, what's going on?
Yeah, you may have heard of Disney, right? So Disney reported last week, right? So there was certainly mixed results in the markets from what they had to say. Revenue was kind of the big drag on the results. They came in at $22.46 billion. That's a full $300 million kind of off of what the street was expecting. But, on the other side, there was some good news that came out as well. Earnings per share, they had a big beat. And they actually had their net income per share. There was expected, or actually last year was 25 cents per share, more than doubled that at 73 cents per share this past quarter. So we've got the good with the bad. Some of the kind of the misses can be attributed to kind of that same old song, that legacy cable business. And it's they had some significant downside on that in terms of the ad revenue that's growing there. But what seems to be the wind in their sails is the Disney Plus. And so that's gained significant subscribers, 3.8 million, pushing them over the $130 million subscribers in their in their back pocket. So and then on that on that streaming news, there was a bit of a standoff. You were talking Google already. Google obviously owns YouTube. There was a blackout of all Disney channels on their services for a little over 2 weeks. Well, they came to an agreement on a multi-year distribution. So that's some good news that Disney was really looking forward to hearing. But turning to their chart. Not really all good news that we can see what we've seen here. Earlier in the year, there certainly was a big bid up in the prices. We see some pretty sizable gaps in their prices bidding up. But recently, we've now seen some consolidations kind of moving forward. As the price kind of moves sideways, yes, we did see annual 52-week highs in this time period. But we formed kind of what we're calling what we can call like a bearish island top. It's formed when you've got a gap up and into the pattern, gapping down out of the pattern. So that could mean that with the weakness that we're seeing in the market, with the weakness we're seeing in the prices, that we could be looking for some pullbacks potentially here. And what also kind of is standing out to me is those gaps and those big pushes up. There's not been a lot of support points created along the way. This is causing me that as we break down, there could be some rooms, those gaps to get filled in, that we could have some projected moves, pushing it down towards lower levels of support, breaking down below 100. $92 is even in play if we don't get some stability from the recent news that's been in play.
Very interesting stuff. Just out of the blue. You ever took your boys to Disney when they were young? You got two boys, right?
Yeah, no, we've not made the trip down.
Oh,
so
okay.
I know.
Kieran's got young
yeah.
ones. I remember my kids asking me when they were young, can we go to Disney World? I'm like, yeah, no. And they're like, have you been? I was like, oh, yeah.
Oh, yeah.
That's what kind of dad I am. All
Yeah,
right.
yeah. And they just raised their prices, in fact, across all of their parks.
Well, you're next,
October.
buddy.
So
you got the
that's-
young ones.
I'm
You're
gonna have
next.
to fork out more on my wallet.
My
Jay
guys
and I
are
are
old
in the
for that
clear now.
probably,
You're
yeah.
next. Thanks for that, guys. If you at home have a question for our team, here's how you get in touch with us. Email td.activetraderlive@td.com. And for more information about the Active Trader platform, scan the QR code on the bottom right-hand side of your screen. It's going to take you to our TD Active Trader Live website. You can try out the platform risk-free. Just open a practice account. You click on Try, TD Active Trader, that button right there. Then when you're ready to switch to a live account, you just export your workspace. You start trading for real. Time for the main event, trading, debating. This week, the stock in the spotlight is retail giant Walmart. Before we get going with the debate, just a reminder to our viewers that the securities and strategies discussed on our show are for educational purposes only, should not be considered investment advice or buy, sell, or hold recommendations. Options trading carries high risk, may not suit all investors, significant losses are possible. So it's important to assess your own risk tolerance. Make sure you do your own due diligence before engaging in trading. Now let's get back to the stock of the hour. It is Walmart. What made you guys pick this one to debate here?
Well, it's obvious, Greg. It's one of the world's largest retailer, but it also means for the U.S. it serves as a barometer for consumer spending and a read of the broader economy as well. So it's always key to clue into them to see what they're saying, especially now we're getting to year end and you're seeing more tariff starting to trickle into sort of their inventory and their pricing and stuff. So good one to look at.
Huge footprint, right? Like over 10,000 locations, right? Biggest, you mentioned it off the top, biggest employer in the U.S., over 1.6 million jobs. And this is maybe a bit of nostalgia. I still enjoy that the Waltons own 50% of the company too. So that's a nice touch there too.
Okay, so let's get into it. We'll get the time on the clock, 2.5 minutes each to make your case. The bell will keep you honest. You guys draw from the hat. You meet on the field of honor on Sundays, as we told the audience. Pistols at dawn, all that kind of stuff. Not that dramatic.
Yeah.
One day we're going to film it. We're going to film. So Jay, you got the bull case this turn around.
I did get the bull case. All right, so here's some facts that you may already, that seem pretty obvious about Walmart. It's the largest retailer in the world by revenue, talking 675 billion. Almost doubling its next closest competitor, some little old shop you may have heard of named Amazon, right? So way down the line, just 391 billion. Seems almost quaint compared to Walmart. It's a true behemoth that uses its immense scale to its advantage, giving pricing power and negotiating power with many of its suppliers, able to keep costs down. And then because it is a low price leader, regardless of market and economic times, it's resilient because it's a place to go that you're going to get value for your dollar. But here, I just wanted to make sure Walmart's not just a giant sleepy retailer. Here's two really interesting facts that I wanted to kind of get out there to really kind of show how Walmart's adapting to kind of the new times and new pressures, new technology that's out there in the market. One is that they're big in the global e-commerce space. Actually, 25%. Their e-commerce grew by 25% in Q2 fiscal 2026, and in 2025, 18% of all of their net sales happen on their e-commerce platform, and they've actually got projections to have that grow up to 30%. And they actually have marketplaces now on their website, so it's they're changing, they're moving with their time, they're meeting their customers where they want to be. And this omni growth, what's actually neat, this huge footprint that we've already mentioned, these are almost little nodes, little hubs for same-day delivery that they're driving customers into their store for these pickups. They're able to leverage that. All right, the next thing out of that I want to mention here is there's opportunities that they're leveraging for high growth and high margin growth here. So one is through their memberships. We're seeing significant growth in their memberships, namely through their Walmart Plus and their Sam's Club brands. We're seeing significant growth. Let's see.
45 seconds.
Oh, geez, we're getting close here. All right, so let's move. You know what? Let's leave a little bit on the table. Let's get to our charts. Here, we've got a 3-year chart up in the chart with the weekly. All I really wanted to do is gaze at this to its bullishness that we're seeing here. We can see that over that time period, we've been living in the top half of the Bollinger Band very consistently. So, but let's move down to something a little bit more recent, so we can look at some more trends that are really jumping out to me here. Over the last kind of like since a lot of the market was in flux early in the year, Walmart has certainly come out of that. We're seeing it trending up in a very positive direction, ebbing and flowing between the top. What's really standing out to me here is as we tested new highs earlier, kind of this earlier in the fall, I should say, we've now. Lots on the table for the rebuttal. We're
flying blind today.
Just blank face there.
We now. It was
good you actually respected the time.
Yeah, that's the first for me even.
The
I
bell
respect the
kept
time. Oh,
them on.
man.
Must be getting better with this thing. Oh,
Yeah.
All right, there's the bull's gaze, as you put it. What about the bear?
All right, their slogan is all about save money, live better, but I couldn't agree. but just for very different reasons. Because after you hear the bear thesis that I'm going to present, you'll agree that saving your money from investing in Walmart is probably living better. So let's talk about it. The two big areas I want to focus on is when you think about Walmart as an investment, you first want to look at the valuation. What are you getting for your dollars that you're putting into it? And when you look at, let's look at the first valuation metric, price to earnings. It trades at a 39 multiple. I don't know from what angle you'd call this a value player, because for a retailer, that sounds more like a Silicon Valley hopeful than America's like low price champion. When you think about also its own historical average, its 5-year average, it trades at about a 26 multiple, and with much higher projected growth rates, that really creates a very little margin for error based on what it's going to produce. Now, when you think about its competitors, since you mentioned like Amazon, but also Costco is a big part of it, it makes even Walmart look expensive when Costco has higher margins and also has stickier membership when you think about it there. When we talk about profitability, that's another one I want to talk about. Walmart missed their earnings for the first time in 3 years in that last quarter. Also, when you talk about operating income, it declined 8.2% year over year. And when you think about the revenue mix, 60% of their revenue comes from groceries, which operate on razor-thin margins. You're talking about 1 to 3% margin. So this isn't a growth story for me, especially if that bulk of their business remains in groceries. Let's go into the charts and show what's happening. You very elegantly alluded, Jay, to showing this big bullish trend, which I've marked, and I'm gonna give you that. But the key thing to this trend is this break over here that I wanted to just signify. We saw this big break after making those highs. We also see a new short-term trend that has counter-trend that has now formed. It respected this trend because it's rejecting off of this line. It's kind of going into it right now and rejecting off of it. But it's also broken below its 21-day moving average as well as its 50-day moving average. And you're looking at a push towards its 100-day. Now, when we look at a breakdown of a key long-term trend, you want to look for confirmation. We did see confirmation, consecutive closes below that trend line and also making lower lows at the same point as well. We actually tagged a new lower low right at the 150-day moving average. So given this backdrop and given that you have now coming into this earnings, more pricing and tariff pressures that are going to probably come out as this earning gets revealed, I suspect it's going to hit that $100 mark and lower.
There we go. I would have given you more than a 45-second warning. I didn't realize you didn't have the clock over my shoulder. I turned, oh my God, Jay's just trying to time this in his head. So no, that's on me.
My clock was off.
But you got more time now. You got 3 minutes to counter each other. You can bring it all back.
Let's go. You know what? That's some of the things I left on the table. Let's bring it back. Right. The one thing I wanted to also mention in terms of those high margins and growth areas was ads and data. Right, so Walmart made a big buy of a TV manufacturer named Vizio, $2.3 billion, drop in the bucket for them. But it's bigger than just owning a TV producer that you might be able to sell. They actually now are offering direct TV that comes free of charge to their customers. It gives them now it's actually generating ad revenue for Walmart. This is not just a cost that they're shelling out. Now they're actually earning ad revenue, but on top of that, they're actually getting data. They know what's working. They know what their customers are watching. They know what they're able to target some things. And if we're also thinking about AI, once again, they have a huge workforce. They've actually made a significant investment to rolling out AI tools for scheduling, for other corporate entities, or for real-time translations, things like that. They're able to remove their scheduling down from 90 minutes down to 30 minutes. When we're talking companies of this scale, any time saving is dollars. They're able to reinvest back in themselves. So there's efficiencies that are being able to had on a grand scale here.
That might be true instead, but it's a very small drop in the buck of their overall revenue stream. The biggest costing, and I'm going to quote what the CEO said on the last earnings call. He said when they think about, they're going to have to go through inventory replenishing cycles, and it's going to now happen at post-tariff price levels. He said, we continue to see our cost increases each week, which we expect will continue into the third and fourth quarters. So that's going to come through. It's no surprise we're going to see that, but just how much. The other thing that you also have is when you think about the revenue mix, I talked about groceries for a second. You obviously want the discretionary categories, a bulk of that because that's where your big profit driver is. But those prices have gone up as well. And you're also seeing, he also mentioned they're seeing moderation in the units at the item level that customers are switching to other items. In other words, they're not buying those items that they want them to buy that are driving them the money. And the big notable thing that just happened that's going to be caught in this earnings is the government shutdown. And you might be thinking, what does that have to do with Walmart? Well, it has to do with something called SNAP payments. And those are the food assistance program. So the government shells out about $8 billion a month to this. Walmart has 24% share of those STAT payments that are funneled through its stores. And that means that all of this money, while maybe it's on a backlog that will come, is not going to be part of this quarterly earnings, and they'll say they missed out on. And the number sits at $2 billion, losing it overall. Now,
yep. And it's just true. That could be a small-term bump in the road, but that money is coming, and over time it'll play itself out, even itself out. Margins are tighter at Walmart, that's for sure, but overall margins, I've got them around 5% as a grander scale across the store. So we've got some meat on the bone there.
Oh, that's being generous, Jay.
Well,
5%.
Let's not slag on Walmart. Sure, there's ups and downs with that, but we have seen consistent, growth of revenues quarter over quarter, 4% since 2023 in Q1. So we're on a bit of a good streak.
Dude, they can grow revenue all they want. If they're not increasing their margins, it means nothing. That means they go on the top line, but they're not doing anything in the bottom line. In fact, the e-commerce has been losing money until just this recent quarter.
Well, proof's in the pudding recently. So.
Spirited indeed. All right.
Yeah.
Let's go back to the bull. How could you possibly trade a bull position on Walmart?
Catch my breath there. That was a feisty one. I like it.
Big breath. Jump into the platform. Show us that bull trade.
All right. So if we're thinking about kind of where we've been, we've demonstrated on the chart. It was the long term we've seen consistent higher highs and higher lows over the long period of time. If you're as an investor looking to be a owner of the stock long term, one way that we could potentially do that is through what we call the wheel strategy. Now, the wheel strategy involves selling puts to open. And if you are assigned, that means there's going to be stock ownership coming your way. And the way that we complete the wheel is by selling calls. And then if upon assignment on those calls, you're now back to net zero on your shares, and you can continue to sell the calls and the puts in that order to generate a repeating source of income. So if Walmart continues its upward swing, the way that we can do that, if we bring up my chart that I've got on the screen here, is that a potential trade would be to sell kind of a near-term put. $99 is what is the strike price that I've got out there, and a goal for this particular trade would be for Walmart to expire anywhere above $99. If it does, great, that expires worthless. We keep the premium. In this case, it's around $1.30 that we take in now. And if it does expire worthless, we continue selling puts to generate repeatable sources of income. If and when we do get assigned on those puts, by making this trade, you've said you're comfortable owning the shares. You're getting those shares coming to you, but the more puts you can sell before those assignments happen, the more amount of credit you've been able to take in, effectively lowering your average book cost on that. But ultimately, the next stage in this particular trade would be selling a call, right? So selling the call, as we can see in this chart, let's just say we get assigned on the first roll of the wheel in this particular case, we could potentially sell a 105 call, taking an additional credit, lowering our effective book cost on the shares as it is right now, and then with still a kind of a bullish lean to our expectation of the price. If it goes up and above 105, we'd be taken out on that particular trade. So how does this all work out from a dollars and cents perspective? You gotta look at your assignment cost. We were assigned at $99 and buying the stock. Took in $1.30 on the put, as well as an additional $2.50 on the call. So that means that's putting our book cost around, what's that, $3.70. So that would bring us down to $95.30 or $96.30 in terms of, and then taking us out at 105. So that would be your gain between the two. I know you're coming back to me from a risk perspective. In this particular strategy, your goal is to be long-term bullish on this. The risk that you're assigned on this particular strategy is the same as owning a stock. If the stock goes down to zero, that's going to be your max loss. So if we're getting in at $99, where that would be the max loss per share, less the credit you took in at the beginning of the trade.
All right, interesting strategy. What about the bear?
All right, so if you have a bearish lean on it, especially with some volatility expected coming into earnings, they also have a leadership change that's at the helm coming into next year. One trade you could possibly look at, especially if you want to play some of the volatility, is a long put butterfly spread. So what this trade essentially is, we're looking for directional move to the downside. Now, this it extends beyond just a traditional spread because we're selling an additional spread after it just to reduce our overall cost. We're big about risk management here, and this is what's going to help us. So the trade would be looking at mapping it kind of where the stock's sitting at right now, looking to buy the 102 put going out into the December cycle. And based on where the charts are, the technical levels are showing me where I think there's going to be the next level of support sitting in the 96. We're looking to double up on that strike price and sell 2 contracts there. And then keep the wings, I guess, equidistance is what we call it, buy out the $90 strike over here. So essentially, what you're trying to do, Greg, is we want the stock to fall below 102. We want it to get all the way down to 96, and that's when we stand to make money on this trade, of course. It is done for a grand total of, this is the kicker on this trade, this is why the butterfly spread works so well, it's for $1 debit, meaning I'm spending $1 in a single contract, in other words, $100. The upside on this trade, of course, is if it goes in my favor, I stand to make the difference between the spread and what I paid, so 6 minus 1, it means $5. So this is my profit zone we've marked over here. If it crosses below the 96, we're still profitable. We're just not going to be as profitable, and that's where our break-even price comes in. Is if it goes below like 91 on the downside, then we will be out. And this is where the risk is. Anytime you put on a trade where you're doing a net debit, the risk is always going to be what are you going to spend on it. It's $100 in this case is what we stand to lose. But also, anytime you're a seller of options, especially if the stock ends up like in between this price, you have assignment risk on the put, which means if it does fall here, we could put the Walmart shares at $96 we might have to pick up there.
All right, interesting stuff indeed, gentlemen. Last week on the Thursday show, you did a reveal. For the
I did do a reveal.
You got all dramatic on me.
Magical tricks, but I should have done it over here.
Magical trick today. I liked it. I liked the reveal. It was like a drum roll drama. All right, thanks, guys. The bull and bear cases for Walmart. Just a reminder to our viewers that this debate was for educational purposes, does not reflect our personal opinions about the stock. And before we move on, Jason, you're going to show us how to exit a trade.
Yeah, we've talked a lot about getting into positions here and talked about some fancy butterflies and wheels and all sorts of really unique strategies, but I want to show everybody how simple it is to kind of exit positions that you may already have in your account. So let's kind of jump into the platform and show you how easy it can be. So I've got this is my practice account like we use each and every week. So these are all mock positions that I've got rolling. Starting first, I happen to have 500 shares of Walmart already in my position. It's already down here at the bottom, seeing 500 shares. If you wanted to exit this position, it's just as simple as right-clicking. I'm on my Mac. I've set up right-click. You can go ahead and do the same on yours if you're doing the same. Once you right-click it, you get a number of different choices that we get to have here. The most important one here for our purpose right now is closing order. So after I hover over closing order, I'm getting different choices that I can exit my trade. You can close with a limit order, I can close with a stop order, or I can even put an OCO, which we can bracket the order with. So I'm creating a stop and a limit order with it that's going to one cancels other in one click of a mouse. So that's really nice and easy. Just right-click, closing order. All right, let's move on and talk about some choices from an options perspective. I happen to have some Apple calls that expire at the end of the week here. If we wanted to kind of do the same exercise, right-click on those Apple calls, I'm getting different choices that are available for me here. I can close them. I can go ahead and create my order to sell. Additionally, same thing here. I can also start to manage if I wanted to maybe buy more time or I maybe wanted to roll closer to the money. I've got the ability to create a rolling order right here with one click, and then I'll be able to adjust my strike prices when it comes up at the bottom. And lastly here, I also even get a choice to send in an exercise request to the trade desk. So right here in the platform, you're getting lots of great capabilities. Okay. We oftentimes talk about multi-leg strategies. Let's now talk about managing those multi-leg strategies and how easy it can be here. All right, I happen to have this is actually from last week. I've got a put spread on McDonald's. The way that we want to manage a multi-leg trade is we can go ahead and select one leg, and on my Mac here, I'm going to hold Command and go ahead and select it. So both legs are selected. I can go ahead and right-click just like I did for my other positions. But I want to show you there's an easier way. I wanted to show it for people that like doing things manually. Here it is. But actually, I can actually arrange my positions so that I can see the strategy as I did it, so make it even easier to manage themselves. Right here, this aggregate button, if I go ahead and give that a click, it's just right now grouped by underlying. There's lots of different ways for you to do it yourself. So get here, get your hands on it, give it a try. But if I aggregate it by order, and if I go ahead and apply that, my strategy is now listed right where my put spread is a vertical put spread. All I now need to do, instead of just laboriously clicking on the two legs, I can right-click right on vertical, and now I've got my create closing order that brings it up. So I now created a spread to exit my position, manage my risk in just 2 clicks of a mouse. So it's really that easy.
Very cool stuff and very efficient. All right, if you have a question about the TD Active Trader Live platform, or not the live platform, that's the name of the show, TD Active Trader platform, or if there's a stock you want to see our debaters go head-to-head on, just send us an email at td.activetraderlive@td.com. And for more information about the Active Trader platform, scan that QR code on the bottom right-hand side of your screen. If you scroll down, you're going to find a tab that says Join a Live Masterclass this Wednesday, 2 p.m. None other than Jason Nadek hosting an interactive session about TD Active Trader. He's going to explore all the main features the platform has to offer. You got to register to spend some time with Jay, and the registration is open now. All right, before we wrap up the show, some of the other key things that investors are focusing on for the rest of the trading week. What is on our radar, Hiran?
Yeah, Greg. So, I mean, the big thing is, of course, with the shutdown now behind our backs, we've got the data that will start coming in there. So I would just want to point out that the BLS is due to release their September jobs report this Thursday. Now, it's kind of dated at this point, but what's interesting is the White House says the October jobs report and CPI index might never be released. Probably instead focusing on the November one to line it up for December. So that's one to keep an eye on. And even if they do somehow come out with that jobs report for October, it's probably not going to include any unemployment rates there. But the other thing also coming out tomorrow is the October meeting minutes from the FOMC, of course. We know there was the next meetings on December 9th and 10th. We know the two big dissenting votes were Stephen Myron, who was advocating for a half-point cut, more on the dovish side, and then Kansas City Fed President Jeff Schmidt want a no cut at all. So again, very divided, so it's a lot of
I think the market's got a like coin toss now.
It's a coin toss, it's a coin flip. I think their
December.
prediction is at about 55% or so that'll be something to see what we can glean from that. But on the other side of it, let's talk about the earnings coming back into that. The one I'm focusing on is Palo Alto Networks. So this is a leading global cybersecurity company that provides advanced firewall, cloud security, and AI driven threat detection to over 70,000 different organizations across the globe. They have earnings coming out on Thursday after the market close. This is a Q1 26 earnings. EPS is expected at 89 cents. Which would mark a 15% year-over-year growth and $2.46 billion on the top line revenue side. But the important key metrics that investors will want to look at is one is next generation security annual recurring revenue. That rose by 32% in the last quarter, so this will be a key indicator of their business strength going into this quarter. And the last thing that's common with these software companies is remaining performance obligations. So that's the future contracted sort of pipeline that they have. Last quarter, they had a 24% increase, so we'll see what they have with that. But they also did launch a new AI agent as well called Cortex Agent X. So this is really designed to enhance security for enterprise deploying AI agents now, because that's going to be another threat to look after. So let's look at the charts though, Greg, what's shaping up to it. So this is the yearly chart so far that have pulled up daily candles. We see this big sort of inverse head and shoulders pattern, which is typically a bullish reversal signal where it shows us there might be a break. We've seen this big sort of neckline which has formed the overhang or resistance for the longest time. It did break through it in early mid-September. However, the one thing that also happened coincided with it is it also broke through this upper channel which it was respecting. It's broken down in the bearish movement, but since then we've also seen this sort of intermediary trend also get broken below the 205, which is now going to be a resistance level. The earnings that are priced in for this is about a $16 move. One of the big risks for Palo Alto Networks is also its valuation concerns. It trades at a 53 multiple when the sector median's at 23. There's something called a rule of 40 in the software companies, if you've heard of it. If you add up the revenue growth plus the profit margin, it should equal 40. These guys are sitting at 26. If you take the two numbers, 14 and 12. So if the valuation is going to be a big concern, and we've seen a bit of that pullback coming into it. So really going to test the 191 on the downside, and possibly if it really surprises to the upside, it could go back and tag the 220 level on the up.
Interesting one. The rule of 40. I'll take that away from this program. And Jay, tomorrow, it is the main event, arguably.
Maybe ring that bell, ding, ding.
Just to give it some pizzazz. NVIDIA.
Yeah. This is the one that, how can we not talk about? Everybody's kind of waiting for this one. And the no stock may be under more scrutiny than NVIDIA. And it's up 1,000% since 2022. The excitement's here, but you've also got these murmurs that are around the market about an AI bubble, right? I know it coming out some words from Google around that is something that it's going to touch everybody if that happens, right? Yeah. Now, in terms of what to expect from a bottom line here, analysts are expecting a shade over $30.5 billion in net income, $50.48 in net revenue, $1.17 earnings per share. But turning to more tangible things, CEO Jensen Huang kind of got out ahead of earnings and made a big announcement around some sales coming for 2025 and 2026. Already talking about $500 million or $500 billion, I should say. Let's not undersell the fact here in new orders that's actually meaningfully higher than expectations. So suggesting that they're feeling there's still more appetite and upside to the AI game here. But I also want to kind of be an equal opportunity kind of discussion here. Let's take a look at the other side here. There's some other big names in the tech space. One that kind of caught my eye was a 13F filing from tech billionaire Peter Thiel's hedge fund. They exited.
He's out now, right?
Yeah, he's out. As of September 30th, their fund was out. Pretty sizable position that they were in, and that's actually on top of SoftBank as well. They completely exited their position, and this is kind of raising, and it's maybe not not a big shocker here, but there's angst about those soaring tech valuations that are out there. So it will be interesting to see. But let's take a second to jump in and take a look at the charts. Hiran touched on NVIDIA last week, and I've got a similar kind of makeup here. There's been a nice little trend channel that we've been moving towards, but kind of as we kind of approach earnings, we're now drawing in towards the bottom end of that end of the trend. One of the things here I've put on here, we've got a measured move kind of out towards the end of the week. I know earnings are tomorrow, but the market's got priced in plus or minus $13.70 from the current price of what it's expected to do by the end of the week. That actually brings us down to, if we break out of this channel, that brings us right down towards a kind of a nearer term support level. So we'll see. Well, if we're not getting, because at this level, if things need to be perfect for the market, if this priced in at that level, so if we're not getting those absolutely A++ plus remarks, then we're then looking towards the downside to see if the market's able to hold it up. And we've already crossed the 21-day moving average just recently. So 50-day average is sitting there right there. If we get any downward pullback, that could give us some legs to the downside. But good news, if we're up back towards those annual highs that we just saw not too long ago. So it's really going to be appointment watching TV.
I always love that saying, price to perfection.
Yeah.
You better show us what you got. Gentlemen, another great show. Yeah. And I look forward to the next time. Next time we'll be with you on Thursday.
We will.
All right. That's it for our show for this Tuesday edition. As always, investors should perform their own due diligence before engaging in trading. Join us again on Thursday, 10 a.m. Eastern Time, same time, YouTube, the Direct Investing channel here on Web Broker. We're going to be speaking with Washington Crossings Advisors Senior Portfolio Manager Chad Morganlander. Get his take on NVIDIA's results. We'll be on the other side of it by then with a signal for the broader chip trade. Thanks for watching.